get 100, 150 points pulled off the markets. That gives you a much better entry point. And here's what you need to know before the bell. The market's doing fine. Absolutely nothing wrong. And again, this is interesting because markets have now gone, as we talked a little bit about yesterday, we've had a 6-week stretch of gains in the market so far. That's a fairly long stretch without some type of pullback, right? At least a negative week, right? You don't need a big correction, but a week of negative returns. So you've had 6 weeks straight of positive returns. A couple of things here just to kind of pay attention to, and tomorrow on the show, we're going to spend tomorrow doing technical analysis. I know that's just exciting for you guys, but tomorrow on the show, we're going to go through very basic 101 technical analysis, so you'll have a little bit better understanding about what we talk about kind of in the mornings when we do our market recap. But the market is continuing to rise in a what's called a rising wedge pattern. In other words, prices are getting more and more compressed. As we continue to rise, the movement of the prices are becoming more compressed. And it's like, and we've talked about before, these wedges are like a spring. And so the more you coil the spring, they're going to break out to one side or the other. Given the fact that markets are overbought on a couple of levels, and we're kind of getting close to, but we're seeing volume start to pull back here on this rally. We're starting to see the MACD indicator starting to slow here a bit, starting to roll over. We're likely going to break to the downside. So this is going to give us that bit of correction. We're probably looking at end of the month, beginning of November, just post-election, if there's a bit of turmoil, whatever it is, see a bit of a correction pullback. That'll give you a better entry point to add exposure to your portfolios. Nothing really to worry about here, but again, we've just had a very, very strong advance here. There's been a lot of front running for the election. If you take a look at the markets itself, as we talked about yesterday, markets are right now running about a 71% probability that Trump's going to win. That's based on how markets are positioning in the markets right now. But there is a very aggressive move in terms of pricing for the markets as investors just continue to chase asset prices higher. Nothing wrong with that. But it does suggest that you're going to get a bit of a respite here somewhere. So just, this is just a decent opportunity. Take a little bit of money off the table, rebalance your risk. Nothing, again, just some basic gardening and pruning in your portfolio. And that way, when you do get some type of correction, which likely give you back to somewhere, in between the 100-day moving average, the 50-day moving average, somewhere in there. So you get 100, 150 points pulled off the markets. That gives you a much better entry point. And then, of course, as we talked about yesterday, the seasonal buy signal is in. So as soon as we get into November, you've got buybacks, you've got performance chasing, you've got a lot of end-of-the-year activity that occurs for stocks, which should lift asset prices higher. Once we get into next year, who knows? We'll get there. But that's kind of the setup right now. Does that mean that market has to work out that way? Absolutely not. If this election turns out into a complete nightmare, this market could sell off into the end of the year. Certainly possible. So again, you can't, this is why we talk about risk management in the portfolios, because you can't ignore potential risk that something could go haywire and just completely mess up the market between now and year end. Again, but seasonally speaking, we're in a good setup. Technically, there's always risk, right? So manage accordingly and you'll do fine. That's what you need to know before the bell this morning. Market is continuing to do just fine. That's what you need to know before the bell this morning.